Good morning, everyone. It's Friday, August 6th. I still can't believe it's August. And this is Nadex Morning Analysis, where we're looking at hot spots in the markets today. My name is Todd Rich. I'm with Nadex. With me, as usual, from Keep Trading Simple is Brian Caprice. Before Brian and I jump into the hot spots in the markets today, I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone. That any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please don't construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. Now, we just had the U.S. Employment numbers or unemployment numbers all get released, and what are we seeing? Well, and the numbers came in. It's incredible. Ahead of the Delta Plus variant, uh, non-farm payrolls. Companies added 943,000 jobs, much higher than what was expected. So a lot of people have been hired. People are coming back to work. The unemployment rate dropped. Unemployment rate dropped to 5.4%. So uh, from an economy standpoint, from an employment standpoint, things are looking really good. So, what was the immediate reaction? The immediate reaction you can see here in gold. Gold got hammered down below the $1,800 an ounce level. Correlating to that, US dollar spiking, US dollar going higher, gold going lower. US equity indices right now, they're currently just a bit flat as I take a quick peek. Dow's up a little bit, the Nasdaq's down a little bit, the S&P is totally flat. So really the hot spots today, where are we seeing that volatility? We're seeing it in gold and we're seeing it in the US dollar. Brian, I'm going to flip it over to you and let's jump into those quickly and we can take a look at those charts in a little bit more depth.
Okay. I have your window up here somewhere. I lost it. I clicked it and it was gone. Yeah. So, for those of you who didn't know, we talked about non-farm as one of the bigger payrolls or the biggest kind of news releases that we have. And a couple interesting things to kind of note from this. One, the Canadian data was also very, very much off. And interestingly enough, the dollar CAD is not moving as much as you would have assumed, even if it was just Canadian data. And again, these two line up. Bad Canadian data, good US data, but only 25 and 24 hours is not very much there. And actually, you're seeing it click back there on the 5 minute. Again, theirs ticked up, and I'm wondering if it's their, like, they tend to be a month behind in most cases. And again, I'm wondering if this is their month behind, if it's going to be their July numbers, and then they'll have the big drop next month. In regards to that, last month in July, the forecast that it would drop from 5.8 down to 5.6, and it jumped up to 5.9, and that surprised a lot of people. Bringing it back now to the 5.4 is kind of more in line with where the July figure came from. And again, they did expect a change in the unemployment rate because states pulling the additional benefits that were going to be there. So they did expect this number to come down. And again, it was supposed to come down 0.2. If you take it from the 5.6 from last month, it's down that 0.2 right there. So it seems like last month's kind of hiccup and what the number is now is directly in line with what the expectation was for July and then following into August, which is kind of, I don't know, it raises a red flag. It's like, really? Because your forecast versus your previous has always been 0.2 with this subtraction. Oh, it's exactly where it should have been on that trend. It's like, that's weird how that works out. But again, good number. I think the important ones to look at here, one is the employment change, hiring more people back. And again, there was an adjustment last time too to that 938. So again, it wasn't too far off. Again, they finally raised the forecast and we're bringing the jobs back again, which again, we knew this. Cut unemployment benefits, people got to work. We know that the average hourly earnings have been raising. And once again, they are raising yet again, but it's kind of that same thing. Last month it was 0.3. This month it's 0.4. We're seeing inflation go at a much higher rate. So while it's great that people are getting paid more, again, it's not outpacing inflation in the grand scheme of things. So, I guess the biggest issue that we have right now, gold is dropping. This is actually a 4-hour chart of gold. I was trying to see where I could find some levels. And again, this is actually a daily level. It's taking the initial hit. You may say, well, wait a second. All these people are getting hired. What's going on? The reason why it's dropping is because they're still acknowledging that inflation does not exist or it's all going to go away. We keep hearing about how we're not back to where we were. The economy is not good and things, but all the numbers that we're seeing, we're kind of back. So it's kind of one of those things where gold traders are looking at this and saying, wait a second, people are getting paid more. We're hiring people back in huge numbers. The unemployment rate is obviously, continuing to fall down, but yet they're telling us everything is still bad, and that we're not, we have so much farther room to go. I don't know exactly how low they think they're going to get the unemployment rate, but at the end of the day, none of those things and having great numbers is great for gold. It does increase the dollar a bit, but here's the dollar index. You may say, well, why isn't it all the way up here? And again, this is a 4 hour. I'll bring it back down to a 30-minute. You can say it's definitely a marketed jump. And again, all of these things are great for the dollar. But remember, at the end of the day, all of these things feed into the interest rate change. And if they're going to hold their feet and say, no, we're not changing interest rates for 2 years, we're in a very bad situation when none of the data justifies it. It's kind of one of those things. If this was a typical number on like just a typical day and there was no COVID, this thing would have shot up, at least $1. It would have been huge. It would have sent, currencies flying all over the place. But the reality is, yeah, we have a jump. We jumped 20 cents. Is that I would say, is it anything that's earth-shatteringly huge for the numbers? Does this move really justify what we saw? And the answer is not really. So again, it's moving. And again, the question is, will we get a continued push of this from the U.S. U.S. indices open, and when will the retrace come in? Because there will be a retrace, and you can see the last time we have, at least in the dollar index. Remember, we're not directly trading the dollar index. Where is it? Right. It's going to make me move it. It's right there. Is actually sitting just a little bit farther for the dollar index. So we do have a little bit more room to run. And then again, gold's got a little bit more room to run to the downside. This is kind of setting up for one of those traps that we mentioned. Once people getting paid more money typically means that there's more inflation there. That tends to be how that works out. But we are approaching a larger time frame zone, which I definitely respect. And we'll see what it can do. If it starts the base in here when we get close to the open, that tends to be great trap territory because everybody sees that this is down for the day. Oh my God, it's horrible. And they start selling it, and that's when it rallies back up and goes to where it was. Remember, it started at 1,800, which is that equilibrium number that we've been mentioning.
Right.
They all have it. 1,800 is where it is in gold, and it's down 24 points right now. All right, it's 27 from where it started, but at 1776. 25 buck move is not a bad retracement, particularly on a Friday. Because at the end of the day, when people are getting paid more money, more people are working, more people are spending money. And again, when more people are spending money, that's not where inflation goes down. So it goes the other direction. So
I wanna take a quick peek at gold. I mean, if you were looking for a retrace, here I'm gonna flip this over here. I mean, how would someone want to play that? I mean, one would be clearly with binary options. You could grab some of these daily binary options a little further up, that where now the probabilities are kind of low, and you get a bounce. I mean, I don't know if it's going to bounce all the way back up there. Uh, let's take a quick peek. I wanted to see where are our call spreads today in gold. I should have. Let's just kind of see. Is there anything down here in this range uh, that would accommodate? Nah, no. These are all kind of. It's dropped so low. I want to see what else we've got here in the call spreads. This is why you mark these off, the call spreads and the knockouts.
yeah, just so they're easy to see. Like I said, you can
Right.
click on all of them and they pop in there. But when you have a different, something that stands out on the chart a little bit different, I find that it's easier to see.
Yeah. There is a call spread in here that could get kind of interesting if you're looking for a retrace, and it's got that optionality. Uh, it's the floor is right at 1775. Remember, with call spread, it goes through that floor. You're not knocked out. I mean, you still have this call spread. So if you're looking for a retrace today, I mean, this has got 4.5 hours to go. Um, there's an idea in here where you might want to take a look. You start seeing a base. I mean, I don't know how far this is going to keep dropping, but you're looking for a retrace. A call spread could be an interesting way to play gold today, just where it's kind of lining up. Maybe looking for a bounce again. You got to wait and see where it stabilizes. Um, but it becomes an interesting idea versus some of the binary options. So take a
Mhm.
look at the call spreads. Could be an interesting way to go with gold today.
Yeah, I think. I mean, like I said, if there's any comments from the Fed about it, today would be the day where we'd see one of those. And I say lesser, but I don't mean like lesser. I just mean like not, not, pal. I mean, basically everybody else. But again,
It's
by no
just
means
not.
lesser. I mean, they are all very, they're all extremely important people. But as far as kind of the hierarchy goes, people below him today, based off these numbers, this is where you'll start hearing them chime up. And depending on who says it, and again, other people talking about it, like the talking heads, if they start talking about this, there
It
will
can.
definitely be people that mention this. That's where you'll see some movement and kind of the market sway over. But like I said, it's really hard to say we have a long way to go to recovery when you're seeing these numbers. I mean, look at historical rates of unemployment, and to say that it's a long way to go,
Right.
mm, it's again, it goes back to the whole, you know, what are they looking at versus what we're being told because it doesn't match up, right?
Yeah.
Um,
All right, so with gold and with gold dropping, the dollar, popping a bit. I mean, gold obviously has moved down much further than the dollar has moved up. Are there any other
mhm.
places you wanted to take a peek at today?
Yeah, I mean, oil did its standard 1% move. I would say that it's peaking kind of at this upper range. And again, the news today is technically good for oil. Again, more people getting jobs means more demand on the oil supply. There is a level a little bit above up here at the 70, 63 level. And again, it's rallying up, but we'll see if we get that continued kind of push back and forth again. With it ending high in the U.S. session, it's what we've seen, the pattern is more that it's going to turn and flip and roll back to the downside. But non-farm today, excuse me, does justify it going continued higher. Besides that, I say the only other outlier that I'd watch out for would probably be the NQ. All the indices I would say today, in my opinion, would probably be longs, just because all the data is good. More people working, people are getting paid more money, unemployment rate coming down. All these things are positive things for business. We haven't seen earnings that have really been too crazy. All of that is really positive news. And you look at this and you say, wait, the NQ is down. Yeah, the NQ is down. Remember, the NQ is the one that benefited the most from COVID and working remotely and people staying home because you're on electronics. So this kind of push to the downside is not necessarily surprising. But I would say once everything kind of kicks in there, it will see a benefit most likely later today. But the way that it's set up, I would say that it's probably more, again, it's going to be the weaker of the four today. I would say, the Russell is probably the one that will soar the highest just based off of, recovery talks. Small caps go first. That's where they would be. So again, I do expect a retrace in these. It'll probably be, again, it's a standard trap. It'll probably be at the open. But after that, I think today would be a day of green pretty much across the board.
Well, I wouldn't argue with that. In fact, I'd like to see that. I could use a nice one of those good feel good Fridays here
Mhm.
in the summer. All right, excellent. Excellent. Well, with that, you got any questions for Nadex, please email us customer service at nadex.com. We are here to help. So the only way we can help you if you have any challenges is if you reach out to us. Any questions for Brian? Brian is also very accessible. You can email him questions at support@keeptradingsimple.com. And a quick little recap. Uh, Non-farm payrolls, people are a lot of it as the numbers start coming in. The service industry is booming. People are getting jobs. Economy added a lot more jobs than what were expected. Unemployment rate did drop some, and with that, we saw a spike lower in gold. The dollar pushing higher, and there are some volatile spots in the markets. Even though it's summer, there is some trading opportunities. So hopefully, you can take advantage of those opportunities. Brian and I will catch you again on Monday. Want to wish everyone a good weekend as well as good luck in the markets. We'll catch you later. Thanks, everyone.